Okay, I got this question a couple of times, which is how do I build my trading plan? You always see me backtesting in the live streams or even when I do backtesting with me, but you never know how I built my trading plan. I've made this video like 1 year ago, really in the beginning of my YouTube journey, which is crazy to see the progression, and it's absolutely beautiful, and I thank you all for being here. But let's dig a little bit deeper once again into how do you build a trading plan. This is something that was asked, and I think it is a very valuable video to put out, so let's go. So I've made basically 7 simple steps for you to follow if you want to build a trading plan, which the first one is learn about trading, learn a strategy, which basically is going to give you the foundation into what do you have to implement in your backtesting, because your trading plan is going to be it has to be based on your backtesting, right? But what do you backtest? There are 1,000 things that you can backtest, and this is when you have to come in and you have to understand what do you want to learn. You need to learn a strategy in order to be backtesting something. Doesn't matter if it's support and resistance, Fibonacci, price action, whatever it is, you need to learn something from someone that has a proven strategy, and then you have to implement that in your backtesting. In my opinion, the best way to do this step and make it as easy as possible is actually joining a community that has successful students and has a proven strategy, because like that you are going to learn the foundations of trading, and then you will have a strategy to implement in your backtesting, which takes me to my second point. But before going on to the second point, if you want to check the community where I'm currently at, the link is in the description, and I hope I already have a coupon code, so make sure to check it out. And yeah, let's go on to the second point. The second point is backtest, backtest, backtest. Depending on the strategy, you will need, I would say, like 3 years of data or at least 200 trades. The reason that I say this is because trading is a game of probabilities. It's like a roll of the dice. It's like flipping a coin, right? But it's flipping a weighted coin if you have a profitable strategy, meaning that the probability of success is on your side. But the thing is, you might have a weighted coin, or you might have probabilities on your side, but you're going through a losing streak of 10 trades and then completely ignoring the fact that there are 80 more trades for you to take that would result in a win. So you need a big sample size in order to see, actually physically see the probabilities playing out. In 10 trades, anything can happen. In 200 trades, that's not the case. In 200 trades, if the strategy works, it works. If it doesn't work, then it does not work. Right? So you need to backtest, 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 and gather all of that data in one Notion template or something, which I also have linked in the description. It's completely free. And if you have a strategy that maybe uses the 1 hour and above, I would recommend everyone trading at least, backtesting at least 3 years of data before actually trying to implement a trading plan. Okay, so you get your strategy, you might learn it from a community, you might learn it from a forum, whatever it is. I think it's easier if you learn from a community, link in the description, and then you go on to backtesting, and for that you are going to need TradingView. And if you are not willing to buy TradingView, I think you just need to shift your mindset into this is an investment in my education. It is crucial, okay? TradingView is absolutely crucial, and it's also linked in the description. You can get 30 bucks off, but that's not the point. TradingView is absolutely crucial. You need TradingView Premium. Like, joining a community is not absolutely crucial, but TradingView, it definitely is. And that's where you are going to backtest, backtest, backtest. And then you go onto your third point. After you backtest those 3 years, or you have those 200 trades or whatever it is, you have to review all the data that you have backtested, because in that backtesting you are going to see a lot of wins, a lot of losses that just comes from the game of trading, right? Because you just take whatever setups come that are supposedly in your trading plan, and many of them are going to result in losses, and you're like, is this not profitable? And then you are going to check the data and you'll see, oh, okay, 20 out of my 30 losses were actually trades that started with a huge wick. And these are the type of patterns that you have to recognize, maybe in the price action or the confluence factors, that you have to then filter out, right? Because for example, for me, I know that if there is a big impulse, but it has a big wick at the end, I'm going to be very, very careful with the setups that I take because I know that they are low probability setups. It's a low probability of playing out, thus a low probability of being profitable. But this only comes from actually doing the backtesting, reviewing the backtesting, and filtering out what is right and what is wrong. So reviewing all this backtesting data with as much detail as possible is absolutely crucial. So make sure to do that. And now, do you just jump onto making a trading plan? Well, kind of, because now you have a vague idea of what works and what doesn't in your strategy, and you can kind of filter some things out. But this is where I would recommend you actually going through all the data again, those 200 trades, and backtesting everything again. Be it the 3 years, the 200 trades, whatever your strategy needs the most. Because for example, if you're backtesting the 1 minute, you cannot go back 3 years. So that's why I'm saying 3 years or 200 trades. And this is where you are going to start to apply those filtering processes that you did by reviewing the backtesting data that you already have. And after backtesting all of that, you need to see if the results are better or if the results are worse. Of course, if the results are better, you review the data again and you're like, okay, there you go. I removed the big wick trades and now my strike rate is 10% better. And this is absolutely crucial. Like, this reviewing of the data is what is going to make you adapt your personality to your trading plan. Maybe you don't like to have a lower strike rate, so you have to reduce those losses that you're taking, maybe sacrificing a little bit of profit, but also increasing your strike rate, thus making it better for your personality. Okay, after that, you have another huge set of data, and you know if the probabilities do work or if they do not work. If you have only 10 trades, understand that those are not probabilities playing out. Probabilities playing out is if in a span of 100 trades, 200 trades, 1,000 trades, you are going to be profitable or not. That is the key question. So after you've backtested that filtered backtesting that you've done before, then you can put it all together and you can start building out the rules for you to start building your trading plan. This is when you are going over your backtesting and you're going to see, okay, this setup worked really well. Okay, let me describe this setup. And you go onto a Word document, Pages document, Google Docs, and you start writing down what works and what doesn't work, right? You start describing every single setup and how you have taken those setups in the backtesting. So for example, if I'm talking about reversals, maybe I'm saying, oh, I want to see a very slow momentum down, followed by one very impulsive candle up, followed by the pullback to my area of interest. And if that's the case, I'm going to enter. Of course, it's going to be a little bit more detailed, but I really recommend you doing this process. It's going to take some time, but it is going to be very worth it. After that, you're going to have your first trading plan. I would not recommend you actually complicating it a lot. Like, don't put psychology, don't put like quotes. Just go like, front page is maybe a logo of yours or your name, followed by trading plan, and then just you describing your strategy. So maybe you take reversals and you call it reversals pullback. Then you go reversal pullback and you describe that setup, and then you do that for all the setups that you take. And it doesn't have to be very complicated. Don't complicate it for yourself. It's not a book, it's simply a trading plan. Whatever setups you take, that's where you write it down. And then there you go, you have your first trading plan. That's a great stepping stone for a trader. Maybe you have multiple trading plans. Maybe I've had maybe like 5 trading plans simply because I'm constantly updating with the live market conditions. And I think that's really, really good. That's why you have to keep backtesting. That's why you have to enjoy the process of backtesting, and that is what is going to make you a great trader. And now you are ready to apply this in the live market, so well done. Right now you have the probabilities on your side and you are on the road to becoming a profitable trader. And now you might be asking, is this it? And I'm like, yeah, first of all, that's going to take you a little bit of time, and then after you finish all that, you go back to step 1 and you do it all over again until you have your own trading plan. So I hope you guys enjoyed. Make sure to leave a comment on what you want to see next. Make sure to check the community that I'm currently at, TradingView, where you get 30 bucks off. And I hope you enjoyed. Let me know if you want me to do any other thing, and I'll see you sometime soon. Peace.